All righty, looks like we're streaming now. Good morning, everybody. This is Marziti here over on the Bullish Bears group, and we're going to do a little bit of coverage of the major markets that we like to trade over here. So let's just kind of see what we can do. Hope everybody's doing well this morning, and looks like everything is good. All right. Let's just talk about, first of all, let's start with the calendar here. Signet goes over a lot of that in the mornings. I'm going to review it for those of us that don't get to listen to his stream necessarily. We do have, actually just hit U.S. trade imbalance, which is hit, but we do have right here, U.S. Red Book is a report at 8:55 Eastern. That report covers retail sales, month over month, year over year, that kind of thing. You know, we have to remember that markets move because the institutions want the markets to move. And if it happens to be that the institutions are in agreement on the direction of the market, well, then it trends or it takes off like a rocket or whatever in that direction. But when they disagree on the movement is when we get into a lot of chop and candle whipping. Now, generally speaking, though, most of our institutions, obviously, of course, they do not share their plans with their competing institutions, their competitors. But they do kind of agree on a time. They do kind of agree on a time of when they're going to place their moves. And given that we really don't see much going on here in the morning session, now we got plenty of bonds in the afternoon. We got Fed speakers, but given that we don't see anything else, it's possible 8:55, although considered a low priority event, we could very likely see a spike in activity happen then. Why though, let's not do that. Why though are we keep talking about, we're in chop, we're in chop, we're in chop, we're in chop? And the answer is because we are waiting for to be quite honest, we're waiting for October the 10th. And that is when a big report, we get jobless, we get CPI coming out, and so a lot of times the market just simply goes sideways. Or, whatever. I mean, it just doesn't do as much. It's not very active in leading up to these bigger reports because the institutions know that other institutions are going to throw their big wad of money at those reports, and so they don't want to start throwing around their large amounts of money too early. So that's something to be aware of. So we could possibly see more chop today. Who knows? Let's start off with a couple observations. Let me bring my notes up here. Just a very quick scan of the headers. What's very interesting, okay, we see that crude here, let's just pop in, let's zoom in. Crude, the average daily range tighter, pivot points are wider. Remember, when wider means that we've moved the goal lines further apart, so there's normally we would say it's going to be a little bit harder to hit, but if we look at what has happened, we started out here on crude. This would have been a pivot point up here. This is the central pivot point here. We did come down to it. We have not hit a pivot point on either side of the central point, though. So right now, as you can see, crude's kind of hanging out around the pivot point. also notice that from roughly that low to that high, we have gone from a low to a high. We did a 50%. We're hanging out around here. We do actually have a box set up based on